Hello, folks. It's Friday, August the 30th. It's almost 10 p.m. on the West Coast of the United States. In this video, I will be following up on the Nvidia video that I did yesterday. So in that video, I showed a flag pattern with a target at 160. That flag pattern has failed, and so that's what we will be looking at in this video. Let me share my screen. We'll get started. So I went back and reviewed the characteristics of a flag pattern, and what I looked at. So this is Edwards and McGee. It's technical analysis of stock trends. This is widely considered the Bible of technical analysis. And so if you ever get interested in that topic, there you go. That's the book you want to start with. Technical analysis of stock trends, Edwards and McGee. So flag pattern characteristics. So nearly vertical or steep pole. And we'll look at these. I'm going to go through these real quick, and then we'll look at the chart and talk about them as they relate to the chart. So a nearly vertical or steep pole, increasing volume on the pole. And so in a lot of patterns, the validation for the pattern is volume, and that's the case here. And that's what I missed when I was putting up the flag pattern with the target. I was not paying attention to volume. So my bad, my mistake. Volume is very important. And as I have been pointing out in several recent videos, when we've looked at charts of equities and the equity indexes, I've been pointing out that the volume is not consistent with the bull market. Instead of rising volume, we're getting falling volume or flat volume, and that's not bullish. We really, in a rising market, we want to see volume rising with price. So very low volume during the consolidation. That's when price is forming the flag. Ideally, we want to see volume drop off. So most common and dependable in uptrends, and that's where we were applying the pattern, is in an uptrend. The flag flies at half mast, and that's the way a lot of analysts talk about flag patterns, and I use similar language that basically the flag pole gets replicated to the upside. This is just another way of saying that. This was a tip that's in the Bible. Wait for confirmation to enter. Don't just jump into you see the start of the flag pattern and you jump in because, oh, it's a flag. Basically, you trade it like it's a breakout trade, that you want to wait for the confirmation. You want to see the price breaking upwards out of the consolidation, the flag, on volume, on rising volume, and then get in. Or you can enter during the consolidation, but if you do that, you want to have a tight stop. So and in the technical analysis manual, they talk about sometimes when price breaks out of the consolidation pattern, it gaps upward. And so if you're waiting for that breakout, you may miss a chunk of the move because you weren't in the trade. So among the fastest and most profitable forms of market action. Well, you got my attention with that one. So anyway, so this is the chart that we were looking at yesterday. There's the failure. And so actually when I did the video, it was late on the 28th, late in the evening on the 28th. I published it on the 29th. And so this was yesterday's action. This is today's action. Clearly a failure of the flag pattern. So now let's look at these. So nearly vertical or steep. Well, clearly that's not vertical, but it is steep. And in my mind, anything greater than a 45-degree angle is steep. And, 45 degrees would be, roughly something like that. And so even a 45-degree angle is really, it's too steep for price to sustain at that rate of rise. That's a steep increase in price in a very short period of time. And so anyway, clearly we can see that this is more than a 45-degree angle. It's probably like 70. And so I consider that a steep rise, which, that's what they're saying there, steep pole, increasing volume. Well, that's what we didn't have. Let me get that out of the way. So if we go back here, let's draw a trend line. If we look at, so there's the start of that move, and what we have during the flagpole is actually declining or flat volume. We don't have rising volume, and so again, that's the mistake that I made. My bad for overlooking that. Very low volume during consolidation. So the consolidation is this area in here. It's the flag or the pennant. And what Edwards and McGee are telling us is that we want to see lower volume during that consolidation period. We've got flat volume, it's lower than this, so you might argue that qualifies. We're using it in an uptrend. Flag flies at half mast, which, so I talk about, there's the flagpole. We copy and duplicate that line. Oops, we copy. Oh, what just happened there? Let's see if we can keep going here. And put it up at the top of the pattern to get our target. So wait for confirmation to enter among the fastest. Yeah, okay. So two options here. We could have done wait for price to rise out of the pennant area, the flag, on rising volume before entering the trade, or enter somewhere in here with a tight stop. And so two options on how to trade this pattern. Let's see, I'm not sure what I did to this chart, but let's keep rolling. This is the same chart again. What's different here? Well, there's two things different here. Before we talk about price targets, let me make one more point that I learned from Dr. Timothy Morge. That was my mentor for Andrew's Pitchforks, and he never talked about price patterns. He looked at the markets in terms of market geometry, which is, it's support and resistance areas, trend lines, channels, energy coils. That's how he would have described this price action here, as an energy coil. And the point that Dr. Morge made about energy coils is that we could think of them as price gathering energy. It's the spring being, or the coil being wound tighter and tighter. And what we can count on is that when price breaks out of that energy coil, it's going to do so impulsively. It's going to come out of that energy coil with high energy because it's been gathering, consolidating energy for a period of time. Here we've got, that's almost two trading weeks of consolidation. So price has gathered a lot of energy. Dr. Morge also pointed out that we can't predict in which direction price will break. And so using the flag pattern, I was predicting a break to the upside on up to 160. Well, that's not what happened. We did get a high energy impulsive break out of the consolidation, but it was to the downside, not the upside. And so just wanted to share with you two different ways of looking at price action, whether it's patterns or, in Dr. Morge's terms, energy coil. So let's talk now about price targets. Let me get rid of that. It's a distraction. So obviously with the flag pattern, we've got an upside target at 160, but that pattern has been invalidated. And so what we're looking for now is where might price find support? What's the downside to this movement? And so there's a number of possible targets. The moving averages are always possibilities. And as we can see there, well, there's the 20-day moving average. That's where price found support yesterday, and price bounced from that level again today and closed above that level. Now, today's candle, that's a doji candlestick, which is always indicative of elevated energy. That there was a lot of trading going on today, but neither buyers nor sellers were either willing or able to commit to a direction. Buyers weren't willing or able to commit to closing up at the high of the bar, and sellers were not able to or willing to commit to closing price at the bottom of the price bar. And so they meet in the middle, and we end up with a doji candlestick. So that candlestick makes me leery, because it could be indicative of a break to the upside, or a bounce to the upside at least, or it could be a indication of continued action to the downside. But as far as price targets, there's price sitting on the 20-day moving average. So potentially Nvidia has completed the downward movement, and now it's ready to head back higher. We'll see. As I've said, we're in we've got an election coming up, and not uncommon that the markets will be managed higher, manipulated higher. Perhaps it's just human psychology. There's enough traders and investors who expect price to go higher into an election, and self-fulfilling prophecy. So a number of different ways to look at the price action in an election year. So what I would say as far as making predictions is be careful, especially if you're a bear. If your bias is to the downside in stocks, which that's me. Be careful when there are bullish factors that could cause price to do something you don't expect. Let's look at the 50 and 200. Well, price has, both yesterday and today, price has closed below the 50-day moving average, and that's bearish. Price did not find support at the 50-day moving average, so that's not a positive indication. 200-day moving average is way down there, which is an indication of price being overbought. That's a big gap between the 50 and the 200-day moving average, which is not necessarily a good thing. So 200-day moving average is a solid target. If we were going to take a trade in this vehicle for the long term, we'd really like to be entering around the 200-day moving average, not way the heck up here. So anyway, enough about the moving averages. Other potential downside price targets come from the Fibonacci retracement tool, and that's what I've drawn here. And so the origin down at the bottom of this price bar, oops, let me put the magnet back on. With the magnet, price acts as a magnet for the tools. And so when I'm putting the origin of this tool, I want it at the very bottom of that bar, and the magnet makes it easy to do that. So, and then the top of the tool, I'm applying at this bar. Now, we could, the absolute top would be there. And so perhaps we could use that as our tool. But the reason that I'm using the top of this bar is we will get increased accuracy in the Fibonacci tools and some of the other tools as well if we apply them to impulsive price action. you can use the Fibonacci retracement tool or the Fibonacci extension tool anywhere. Slap it on a chart. It's like, hey, there you go. There's my price targets. Well, for the best accuracy, we only want to use these tools on impulsive price action. And so I would describe this upward movement as being impulsive. That is a high energy price move to the upside. And so I feel fairly confident using the Fibonacci retracement tool to look at this pattern or to look at this chart. 382 is common target. That would be down at, it's almost 115, about 115. So that's a potential downside target. We've got the 50% retracement, which actually comes from Dow theory, not from Fibonacci. But that's another possible target. That would be 110. The 62%, it's actually 61.8% at 105.71. That's another potential target. These targets obviously are further down. We've got the round number at $100. We've got this support and resistance zone from, what's that, 101 down to 96, 97, something like that. So the next target in the series of targets to the downside is this 38% Fibonacci retracement at essentially 115. I'm noticing that we could draw a support resistance zone, right in there somewhere. And as I've shown before, what I'm focused on is the upper wick. I'll expand this. I'm drawing this, it's a resistance zone based on this candle. This candle pushed up into this area and then pulled back and closed right there. And so I'm identifying this as a potential support area if price gets past the 38% retracement level and heads lower. And notice that it's coincident with the 50% retracement there. So let's see, anything else we want to talk about? Let's take a quick look at the other indicators. So energy about halfway, accumulation distribution is still elevated. So most investors are remaining long this vehicle. They're hanging on to their shares. We did have some selling. We can see, their line clearly headed lower. MACD in bull mode, so still in an uptrend. The primary trend based on MACD is to the upside. MACD in bull mode. But MACD is, I wouldn't call that a buy or sell signal at this point in MACD. Let's take a closer look. Yeah, so very close to a sell signal unless it heads higher on Tuesday morning, because remember, we got a 3-day weekend in front of us, so we won't know what happens next until Tuesday morning, but potentially a sell signal on the open Tuesday. We'll find out. Let's take a quick look at the overall markets. This is the NASDAQ. Obviously, Nvidia is trading. I remembered I wanted to talk about one more thing in here. The reason that the flag pattern failed, besides me forgetting to pay attention to volume, the market decided that it didn't like Nvidia's earning report. And in particular, if we look at what TradingView, that's this platform, notice that the Q2 earnings actually exceeded analyst forecasts. So, usually that's the reason for investors and traders to take a stock higher, because it exceeded the expectations. But in this case, obviously, Nvidia headed lower. What TradingView is suggesting is the markets didn't like, there it is, markets didn't like the news or the lack of news about the Blackwell chip launch. There wasn't a lot of detail about the challenges that Nvidia has and is facing with the Blackwell chip. They just acknowledged that there was rework required, but still expected to be shipping this chip in Q4 and have several $billion worth of revenue from sales of Blackwell chip in Q4. So my interpretation of those earnings was positive, which gave me more confidence to predict an upside target. Obviously, the markets decided otherwise. I saw one analyst suggesting that investors and traders have gotten so used to Nvidia earnings just totally blowing away analyst expectations that they were expecting that yet again. And so disappointed that Nvidia didn't tell everybody, hey, we're going to the moon. And of course, if you've paid attention to me, trees don't grow to the sky and stocks don't either, and nobody gets to the moon except maybe Alice. So anyway, okay, now let's do a quick overview. I'm at 21 minutes. I'm watching my timer, and this will be quick. So as I pointed out the other day in the last video, this open gap to the upside is a sign of weakness. The fact that that gap didn't get filled. So price got up to this level, which is very close to that gap. And so the fact that Nvidia was unable to close that gap is a bearish indication. It's an indication of weakness. Price was not strong enough to fill that gap. And so the fact that the stock rolled over at that point instead of filling the gap the index, I'm thinking Nvidia while we're looking at the index, excuse me. The fact that the index did not close that gap is an indication that the overall market that Nvidia is trading in is weak, relatively weak. And of course, strength and weakness, they're always relative. So the fact that the market rolled over at that point without filling the gap is bearish. Notice today that we got price action to the upside, a little bit of a lower tail on that candle. It's that wick isn't big enough to say that it's a bull hammer. I mean, it is in the form of a bull hammer, but the lower wick isn't really long enough for me to describe that as bull hammer. Rising volume. So we did get some volume coming in on this price action today. MACD mostly flat, but it is in bull mode. So primary trend based on MACD still to the upside in the daily time frame. Energy is elevated. So SPX, similar price action today, bullish. Obviously moving to the upside, pushing up into this resistance level, did not reach the previous high. So not quite a double top. The bulls are hoping that it doesn't double top and roll over, but we'll have to wait and see what happens. MACD in bull mode on a buy signal, energy very elevated, rising volume. So that's bullish action. That's bullish action in both NASDAQ and SPX. We'll look at the Dow here in a second. And actually, that's not what I was expecting today. I was assuming that investors would be hesitant to stay long before a 3-day weekend, that we would see weakness in today's action because of the 3-day weekend, albeit thought that just crossed my mind. Tuesday is September the 2nd, I believe, and September is when the the heavyweight analysts come back to the trading desks, you know, the JPM and all the big investment banks and the hedge funds, et cetera. You know, they've been on vacation. And so the B team, the B team has been in place, but the A team will be back in place on September. So, or on Tuesday. And so perhaps some investors and traders are thinking of that. They want to be long come Tuesday morning when the A team sits down at their desks. So, but you know, what the heck do I know? I'm just spitballing. The Dow is the most bullish of the three indexes, clearly. Interesting to me, yesterday morning, this candle, which is now a doji, looked like today's candle. It looked very bullish. It pushed up to a new all-time high for the first couple hours of trade. I think if we look, yeah, here we are in the 1 hour chart. And so there was that the open? Nope. Let's see, 29th. So there was the open, there's an hour, there's 2 hours, and we get bullish action for, you know, 3 hours there, new all-time high, before price dropped back down. We're seeing that again today where, you know, price has pushed up. Did it make a new all-time high? 41,585, 41,5. Yeah, so a new all-time high again today, bullish candle, MACD in bull mode on a buy signal, albeit very overbought. So based on MACD, price is very overbought in the Dow, very overbought relative to the moving averages, and in particular relative to the 200-day moving average. So very, very overbought. Price energy is elevated. I don't think we don't get volume on the Dow. That's all I've got to share in this video, folks. I just wanted to follow up on the failed flag pattern in Nvidia, because the key thing is I wanted to understand where I had gone wrong. And as I said, I forgot to pay attention to volume as a confirmation of the flag pattern. And so my bad. In the coming videos, I'm planning the next couple of videos. I'm going to look at the individual component stocks of the Dow index, and I will be publishing those videos this weekend. So something to look forward to on holiday weekend. Talk to you soon, folks. Let me stop sharing, end this video. See ya.